In this video, I'm going to look at CADJPY. I'm going to pick up from where I left off last week. So at the start of this week of trading, what information would I have available to me? I would have the previous week's volume profile. And I switched chart here, and now I'm looking at the 1 hour bar, but I'm looking at it against the previous week's volume profile. So this here in the pink is the previous week's volume profile. Over here in the orange is the current week's volume profile. Now this is not fully developed as we have not had a full trading day yet for the week. It's only Monday. So doing my homework over the weekend, what information would I have? I would have last week's volume profile. And with that, here it is. Now we look at this, and last week, this is all of everything here in this box shows last week's trading activity. And it was contained to the high to low of 72.5 pips. So last week was a very sideward moving week. A lot of stuff was a slow week because it was a holiday in the US. Thursday and then Friday was not very busy. And then Monday was a holiday in Japan, I believe. So CADJPY didn't have much movement last week. So because of this very small range, what I decided to do was look at the previous 2 weeks volume profile. And that would be looking at this week here and this week here. These 2 weeks spanning this range here generate this volume profile in pink. And when I look at that, coming into trading today, or coming into trading to start the week, the information that I would consider would be, well, what's the most basic thing? Is you look at the highest point and the lowest point. So the two blue lines represent the highest high for the 2-week period and the lowest low for the 2-week period, which goes from 93.08 to 91.62. Then from those two highs and lows, those support and resistance point, I then look at the volume profile to find the volume point of control. And the volume point of control is right here on this purple line. I'm going to make this purple at 92.077. Now, I don't look to trade from the volume point of control. I look to trade to the volume point of control. And when I'm below it, when price is below the VPOC, I'm looking to buy to go back to the VPOC. And when it's above the VPOC, I'm looking to sell and have the target back to the VPOC. Now, what would be high probability entry points? One would be, it starts at looking, I need to find the low volume levels on the profile. So the low volume levels on the profile, I'm going to just disable this for a moment, which is the current week. I'll just leave it. The current week is in orange. What's more important for me to be looking at here is the previous period, and in this case, the previous 2 weeks volume profile. And when I look at that, I can see that, I'm going to make this pink. Oh, that color is fine. Okay, so why am I placing it right there at 91.80? Because that's the low point of volume. Yes, there was a bit more volume down here. There was some bars that spent some time down there, but that was it didn't generate enough volume there to start to see this profile bulge out like it is over here and over here. So when I get in here at this point at 91.81, when it comes down to that, I could take the buy, or if it comes back up like it did here, I can take a buy and say, you know what, it looks like it's coming back into this accepted range. Then look for it to run up to high points. So here is a high point, and that's a nice place to target, or to evaluate, will it go further up, or will that hold and then potentially bring it back down like this. And it didn't do that. What it did do was go past this high point, go up to the previous 2 weeks VPOC, which is right there again in the in this darker color horizontal line, and then it slowed down there a little bit. Notice it slowed down right here, which was the VPOC for the 2 week, and it slowed down a little bit right here, which also happens to be a high volume point. And in this case, the buyers won out. They continued to buy and move price further up. Then if the next potential place to look for it to go to would be up to this high volume point right there. And this is what I should have done yesterday, coming into the week, is to identify these high volume points and then trade to them. So right now, and then from here, it got past that, and again, this volume profile is not dynamic. It's fixed. It's the volume profile for the last 2 weeks. So this is information that's available to me. I have it. I'm not waiting for it to be developed. It's available, so these levels are there. And once it gets past this and it starts to move further up, the likely target spots would be here in this high volume area and right up to this high volume area here. And we can see here that that's exactly where it went to. It got accepted into this high volume range area, and once it got accepted into it, it came up to the high points within them. So to review, coming into the week, my low probability trades would be to take buys in these low volume areas here, which is below the VPOC, and then target up to the VPOC, and if it gets accepted into the VPOC, then look for it to run to the opposite end, the opposite extreme low volume area. So the low volume area on the low side was down here below 91.81, and if buyers come in there, then the big boys or the people who know how to trade and can hold on to it, they would look to target back into high volume areas for places to take part of their trade profits there, or to take them all off. Now, how does that line up? How do these high volume area points line up with just basic support and resistance level? We can see that this was a resistance level here, and it broke above that. So you could think that a lot of people who don't trade with volume profile may put their stops above that. Here's another resistance point, and again, another potential place to put stops if anyone was taking short trades for whatever reason along up here. These are anything above here is where they would say, well, I don't want to be in this trade above that because I'm going to be wrong. But when you're armed with the volume profile, we could we could see that the better place to put your stops would be on the low volume areas to the upside, which in this case happens to be low volume areas are up here. This is, I mean, you could start taking short trades anywhere below this thicker line here, and the good place to put your stops would be above here. Now, if you start to think like that I want to have stops above here, then you're looking for price to get as close to that level to execute trades to to the short side. And again, how do I decide that what's the potential closest place it could come to? I look at high volume areas. So I would be thinking, and which is what I am thinking, is to look for price to come into this area, this yellow rectangle, and when it does come into this area here, that's a good place for me to take a short trade, and anything that goes above this very low volume point here would be that's where I'd want to place stops. There's a bit of volume that's generated in here, and my stops can't go in here because it could potentially hit my stops and then run back to where my entry was or down to profit. I just don't know which way prices is very comfortable in here. I need to look at where it's not comfortable, and where it's not comfortable is right in here in this low volume point. If this low volume point holds, then look for price to come further back down, potentially back to the VPOC. Down here, same thing. I want to take trades in this low volume area to the upside, and if I'm wrong, then I need to be out of it below this blue line, below 91.62, and because if it comes below that, then it's gonna run down to the next potential high volume area to the downside. So just to review this quick video here, had I done my homework over the weekend properly and just simply studied the previous 2 weeks volume profile, there would have been potentially over 70 plus pips to be gained, because you'll be buying at a low volume point below VPOC and looking for it to run to VPOC. If it runs through the VPOC, then look for it to run up to the next low volume point above VPOC, and that's where the exit would be. Once I get up to the top end, when we're not quite there yet to execute short trades, take short trades around the 92.70 area, and then look for it to come back down to the low end of these high volume areas. Sometimes it can be that simple.